So here's the situation. You want to create passive income so that you no longer have to trade time for dollars and you can actually spend each day doing what you love. You know real estate investing can do this for you, but there are a lot of different strategies and most of them just end up creating another job for yourself. So, what is the fastest and simplest path to financial freedom? The one that guarantees you will reach your goal and get to live the lifestyle you've always dreamed of. That's the question, and this podcast will give you the answers. My name is Brian Ellwood, and welcome to the 12 Houses to Freedom podcast. What's up, guys? Brian Ellwood here. Welcome back to 12 Houses to Freedom. I've got an amazing episode for you guys today. I'm really excited because I have a man on the line here who I think a lot of you are going to really enjoy hearing from, someone that I've done business with, a man who runs an amazing company called Marshall Reddick, and he basically brokers private money loans for people like you who want private money for your rental properties. And he's got a really cool business model. We've done a pretty good amount of business together, and I've referred a lot of people to him. And I was just like, I got to get this guy on the show so we can talk about what he does. So welcome to the show, Patrick.
Hey, thanks so much, Brian. Really appreciate being here, and thanks for the invite.
Absolutely, man. So let's go ahead and start out with your story. Just tell us, what did you do before this and kind of what are you up to now?
Yeah, awesome. Well, I have an interesting story, right? I didn't do anything before this, at least career-wise. So I grew up in a family that was very much the millionaire next door. My mom and dad were always savers and they were hard workers, but they were never really wealthy. But when they would own their primary residence, they would move eventually at some point, but they always kept their other primary residence as a rental at that point in time. So it was very much, hey, saving is a good thing and real estate was a good thing, but it was never like a business type. But they ended up with like 10 rentals in California where I'm born and raised. And obviously California real estate's done amazing things over the last 30 or 40 years. So I went to college, and, in college it was like, hey, Pat, you need an internship, get an internship. And they were investing with a guy at the time. This is, late 90s. They were investing with a guy named Marshall Reddick. And so long story short, I got an internship with Marshall Reddick Real Estate in 2003. And voila, fast forward 16 years later, I can't believe saying that, here I am running a private lending department at Marshall Reddick.
That's awesome, man. So you went straight to it. You didn't beat around the bush and get a bunch of crappy jobs like I did.
Well, I'm very blessed. There was people along the way that introduced me to the right people. And of course, I have to thank my folks for always supporting me, telling me how important education was and that type of thing, and thrusting me into the right environment from a very young age.
So not only do you run the private lending department there at Marshall Reddick, but you're also an investor yourself, correct?
I am. Yeah, absolutely. My goals today are much different than they were when I first got started. 2003, everyone in the world was trying to buy rental property in every market around the country. It was incredible what was happening, right? So I succumbed to that, and I bought my first rental property in 2004, and I literally knew nothing about real estate. I used a conventional loan. At that time, it was 5% down, and I just went for it. And at that time, I was thinking, hey, I'm going to own 10 rental properties over the next couple of years, and then I'm just going to pay down the debt, and then I'm going to retire early with 10 rental properties, and the cash flow is going to take care of everything. And that's still a great model. Obviously, I subscribe to that, and we here at Marshall Reddick still do the educational platform, and we're a conduit to helping people with rental property.
Mm-hmm.
But, I also invest in my own private loans now inside of my program.
Awesome. Yeah, I can see being in your position, you could recognize the value of just being a lender on real estate. I think it's something a lot of people want to get to, right? Because then you don't even have to talk to a property manager. It's like kind of like a next level of passive income, right?
It completely is. Rental property is great, but that's one of the things that I really learned. I think I got to, 6 or 7 doors all single families. And I'm thinking to myself, this is a little bit overwhelming. I mean, of course, I have a property manager, but you have to manage your property manager. Right, you have to do the accounting, and I was estimating spending something like 2 hours a month per rental, and that's cool. But the lending aspect of things, when you get to that ability and you have the capital, it is 100% passive. You're letting your borrower worry about the tenant's maintenance, vacancy, and that type of thing.
I hear you. If I was sitting on $1 million cash, I would be very tempted to, and I probably wouldn't need nearly that much to get started.
Yeah, absolutely.
So tell us more about what Marshall Reddick does.
Sure. Well, Marshall Reddick, real estate investment firm. We have services that we offer, and we also have products that we offer. So from a services standpoint, we're a brokerage. So we have our home office here in Newport Beach, California, but we also have an office in San Antonio, Texas, and also one in Clarksville, Tennessee. A couple others going to be popping up on the horizon, but that's just your regular real estate agency transactions, whether you're a local to one of those markets or whether you're an investor and wanting to buy in one of those markets. We do property management. So we do it here in Orange County and LA out of our Newport Beach office, and we do it in San Antonio and Clarksville. And so then we also do the private lending. And so that's on the services side from private lending. I lend capital to not only those who need short-term money, fix and flippers or gap transactional funding, that type of thing, even new construction, but also to long-term buy and hold investors who maybe they need non-recourse debt because they're borrowing inside an IRA or a 401k, or maybe just for one of any number of reasons they can't get that conventional loan. So the longer term products obviously are 5 to 30 years versus the short term products, which are 12 months or less. So on the other aspect of that is that from an investment standpoint, all of our capital comes from private individuals like me and you. So if you get to that level with $1 million and you want to lend it out through our platform, we put you right on the deed and you collect the interest. We don't arbitrage that interest.
Got it. And so I don't want to get too much into the weeds on the different loan products, which you didn't either. I appreciate that because I'm sure you're going to kind of tell people where to go to see your rate sheets and all the things you offer. And it would be better for all of you listening to look at that visually versus hear it all being kind of spouted out on this podcast. But to kind of repeat what Patrick's saying is they have private lending for both short term, if you want like fix and flip money, or if you just want like 12-month money where you can get most or all of the money to purchase and rehab your property. They have that. Interest rates are a little higher. And then he's got longer term stuff like 5, 10, 15, up to 30-year loans for kind of once the property's stabilized. And I've done several with you, Patrick, where I used the 12-month money to get into the deal and then refinanced with you into the 5-year money. And it's worked amazing. And you guys are really easy to work with. You didn't hassle me for a million different things and got the deal done. And Patrick, I'm going to go ahead and kill both of our video just since we're having a little bit of connectivity issues and just roll with the audio. I want to talk about the requirements for getting these loans because a lot of the people listening, and I've coached many of them, they're just kind of scared to make that call to you or to a private money lender because they don't know what to say. They don't know if they qualify or if they are worthy of getting money. And so I want to talk about what requirements are there from your end if you're going to give somebody a loan. Like what do you look for? What would disqualify an individual from borrowing from you, if anything? Could you talk a little bit about that?
Yeah, absolutely. And I'll first say that I can understand why people would be scared. I mean, if you've ever talked to a conventional lender, man, that's a really scary process. Mm-hmm. But from the private side, there is nothing that could disqualify you from being a borrower. We are 100% an asset or a collateral-based lender. We qualify the property and not the borrower. So there's no credit check. I'm not going to be asking for tax returns or trying to calculate a debt to income ratio. None of that's important to me. I'll ask you for bank statements, just because I want to see you've got the capital to do the rehab if you're doing a short-term loan, or if you've got the capital for the down payment if you're doing one of our long-term loans. But from an individual person standpoint, there isn't anything like, we're not worried about foreclosures. We're not worried about short sales or something of that nature. Again, we're going to qualify the property, the asset, and not the borrower.
Okay. So you don't care about how much money somebody made on their tax return. You don't care about what their credit score is. You do want to see how much cash they have in the bank. Now, what if I was going to borrow, what if I had a house where, purchase price was like 30 grand and it was $10,000 in rehab, and I was going to borrow like all 40 of that from you to purchase it and rehab it because the ARV was going to be high enough where I had the room to do that? Would you still want me to have 10K in the bank?
Probably 10K wouldn't be necessary. But, and even though I do have programs where we'll fund 100% of acquisition and 100% of rehab, I'm not just going to give you 100% of the rehab right out of the gates. So I'm going to give you the purchase money, maybe 100% of it right there, but you're going to have a few bucks for closing costs. And then you may have, a few grand to do some demo and to do some initial work on that rehab before you show me photos and that type of thing. And then I reimburse you from the loan amount that's sitting there in escrow. So you don't have to have the full 10 grand, and certainly don't be afraid to show me your bank statements. I've seen everything, right? But I'm just looking to see that there is some capital available, because I want to help people, but I also, from my end, I'm evaluating risk, right? And I need to know, can I make this loan and get my cash back? Because I don't want the property, right? That's why I'm in the lending place in the first place.
That's a good point. And I remember doing a deal with you where I borrowed, I think it was similar to what I said. It was like 35 to buy a house, another 15 for the rehab. So that would be 50 is what I initially borrowed from you on a 12-month loan. And the rehab ended up being like another 5 to 10K beyond what you loaned me. Right. And so I did have to dip into my own cash to finish that off. So I can see how you would want to see that someone has a little capital in case because contractor estimates are not always 100% accurate, right?
No, totally. And I mean, anyone who's gotten into a fix and flip or a rehab, no matter how light or how heavy, there's always something that was unforeseen.
Very good point. And a lot of people message me and they say, Brian, you say you can get into real estate with none of your own money, right? And I'm like, yeah, you can. And here's an example of how you can do a deal without any of your own money. But I do recommend you have some kind of an emergency fund, because if you have like $50 in your bank account, right, and you're borrowing all the money from someone like you, and then all of a sudden the HVAC unexpectedly blows up, that's a $3,000 surprise. That's probably like the worst surprise that you can find, other than like the foundation being screwed up, but you really should have caught both of those during your due diligence. Either way, it's really good to have that in the account. So I can see why that's something that you do look for. And that's interesting that that's kind of all you care about, right? Like you don't care. Go ahead.
Yeah, most people think the opposite, right? They think that I'm going to be, just chewing them up like a conventional lender would. But that's, being an investor myself, having gone through the process so many times, having done a few flips, a few wholesale deals, and understanding the need for speed in private lending, and understanding the person on the other end really adds value to our program here and what we do at Marshall Reddick, because we're here to support, right? We love the entrepreneurial spirit. That's how we built our business. We just happen to have a tech platform where we're allowing, borrowers and lenders to do business together through us.
Yeah. And I really like when we first talked and I expressed some of my frustrations to you about dealing with conventional lenders and all their paperwork and surprise underwriting, holdups and stuff. I was like, man, I don't get it, Patrick. Like, if a house is worth 100K, why won't someone loan me like 60 or 70 when they have a lien on the property? And if I don't pay them, they can take the freaking house back, right? Like, they shouldn't care about that time I missed a payment on my mattress that I financed in college. But I've literally had bankers hold up a deal over that before. And you said to me, yeah, Brian, I totally get it. Like, that's what we believe in. We are an asset-based lender. And it was like my knees buckled, when I heard that. I was just like, thank God, like somebody thinks the same way I do.
Yeah, totally. And there's increasingly more private money that's out there, but make sure you do your due diligence on your lender just like you would on your property. Right. You need to know that you're working with someone who actually has the capital and the ability to do it. And what's most important, as I'm sure you would agree, is if we have a closing date, you need to know that that money is going to be in escrow on that closing date.
Yeah, that's super powerful, man. And another thing that to think about is that banks will only give you 10 traditional loans, right? I think the cap is still you can get 10 30-year fixed conventional loans and you're done. So if you want more than 10 rentals, you actually have to play with alternate sources of financing beyond that. So I kind of say, why not get into that now and already have that in your tool belt, working with someone like you. And actually, your interest rates are higher than the interest rates at the bank. They're not that much higher, but they're higher than the bank. But I actually kind of believe that it's worth paying more to have less hassle, right? I'd rather just get cheaper property. I'd rather negotiate harder on the purchase price with the seller so I can turn around and pay you, 6.5% interest on a 5-year loan versus paying more or paying less for, versus going to the bank and getting a 5% 30-year loan, but it's 60 days to close. I got to send them 79 documents signed and all that crap.
Yeah, no, and you're totally right. But I got to say that although 6.5%, which would be my lowest interest rate on my long-term programs today, that is higher than the conventional rates. But I mean, when I got started back in the early 2000s, I mean that was even an unheard of rate. I had several of my first loans that were in the sevens. So it's all relative, but certainly I agree with you. People are willing to pay for customer service and they're willing to pay for speed, which banks and conventional lending institutions do not offer either.
What do you predict is going to happen with interest rates over the next, say, 5 years?
Boy, that's a very tough question. It's like predicting what's going to happen in the economy or the housing market. I mean, there's really no place for them to go but up, I think, but I don't see them going up with any type of speed. I mean, we see them kind of languish. They went up a little bit, but then they kind of dipped again recently. So I think the general trend is upward, but I think that they're going to remain at pretty historic lows for a good period of time. Maybe another 5 to 10 years.
So even if you're paying 6.5% interest, it's high compared to what the banks are offering now, but the banks could be charging more than that down the road, and it'll look like a screaming deal. Kind of reminds me of all the real estate deals I've looked at in my career where I'm like, I'm not paying 50 grand for that house. Market value is only 40. I'd be a sucker to buy it for 50. And then 1 year goes by and all of a sudden the house is worth 60. And I'm like, damn, it would have been a good idea to buy it at 50.
That is definitely true, right? Appreciation is one of those funny things. The interest rate, though, a deal like you're talking about, 40, 50, 60, even 100 grand. I mean, the difference in interest and the monthly payment between a 5 or 5.5 versus 6 or 6.5 or even 7, it's not a big change on a monthly basis. So, it's just getting beyond the idea of, oh my gosh, that's a whole point higher, or that's a whole 2 points higher on the interest rate. When you dial out the numbers, no big deal.
Yeah. I mean, if I buy a house for like 35 and put 10 into it, and it can appraise or it can rent for like 900 a month, so it's almost like a 2%er rent to price ratio, I can actually pay you 9%, I calculated, and still be cash flow positive. So that would be like your short-term expensive loan. Or actually, no, I think you have one that's 12. But the point I'm making is it comes back to buying the property right. When you buy a property right, it makes things so much easier because you can pay expensive money for a period of time until you get your ducks in a row, and maybe you can go get a bank loan or whatever. You can still cash flow. You're not writing checks to keep a property afloat. So that's really the key. It's not trying to finagle another 0.5% here or there or whatever.
Yeah, no, I totally agree.
So I want to dig back into some of the objections people have, because I want people to call you, okay, when this episode's over and do some business with you and grow their portfolio. You've already kind of talked about how, you don't care about the person. There's nothing about the individual that could disqualify them other than maybe they need a little bit of cushion in their bank account. You don't care about their credit score. You don't care about their income history. What about if someone's never bought a rental property before? They have no experience whatsoever.
Sure. Well, that depends on if they're going short term to buy distressed, fix up, and then refinance out. I think you guys in the industry call that BRRR or something along those lines. Versus buy and hold. On the buy and hold side with me, I mean, my maximum loan to value, again, buy and hold being the long-term money, is 60% max loan to value. So if someone's going to bring in 40% down or has 40% equity in a refi situation, I just don't care. I'll make the loan no matter what your experience level is.
Got it.
So it's that LTV position that just makes me feel warm and fuzzy, and that LTV is based on current market appraisal. So on the short term, certainly I'm going to take into consideration your experience level, and I'm going to also take into consideration is the size of the rehab. If you come to me and you're a first-time borrower or at least first-time private, you don't own any rental properties, didn't have any experience doing rehabs and things, and you're buying a property for 50 and it's got 150 rehab and a 300 ARV, I'm going to be a little gun shy about that deal.
Right.
But if I'm looking at the kind of things that you do, where I'm looking at a 30, 40, 50 purchase and a 10, 15 rehab, no big deal, because you're looking at carpet, paint, maybe some mechanicals or, some exterior, maybe a roof or something like that. It's not the end of the world. But I might dive into a little bit about your family and your history. Like for myself, for example, when I got started, I knew that if I ever got really into a rock and a hard spot and I needed to call mom for a quick $5,000, I could have done that. Mm-hmm. So I'm going to explore a few things, but for the most part, I'm going to get a really good feel about you and your level of experience and your confidence in a quick phone call. Right. And don't be scared about it. The thing to be scared about is to not pick up the phone.
I love it, man. So this is sounding less and less scary. I'm trying to put myself in the shoes of a beginner here. What about, I think there's a lot of people who just don't really know what to say to you in the first place, and they're just like, if I call that guy, I'm going to be talking about something I'm not really savvy on yet. So when you start rattling out loan products and interest rates and balloon payments, they're going to freeze up. And I think people just avoid the possibility of that even happening because nobody wants to look stupid, right? So I believe that's a big reason why people don't call you. What would you say to someone in that position?
I'd say, well, over the telephone, I can't see you. So if you totally botch the phone call, you can just hang up and I'll never know you otherwise.
Just use an alias in the beginning until you nail the phone call, then give them your real name.
Yeah, I mean, no big deal, right? I love to talk about real estate. I love to talk about our loan programs. And I was a beginner at one point in my career too. So you just have to take the risk. You have to take the leap of faith, whatever you want to call it. And so just call it up and say, hey, Pat, how are you? My name is Brian Ellwood, and I'm interested in learning about your loan products because I've got some deals I'm looking at and I don't want to miss out on them. right? When you give me that, oh, I'm hungry and I'm okay with what I'm doing here, that's what I need to hear.
And if someone's a beginner, can they just be honest with you and tell you that right out of the gate?
100%. I would prefer honesty over trying to, put on airs or be something that you're not. Because at the end of the day, and I say this to all of my clients, whether it's a borrower or a lender, I'm willing to help you, but I can't if you don't tell me the truth.
Mm.
Right? We need to have a relationship. And most of my borrowers are like you. We do a couple deals. I like you. You like me. It opens up the doors to unlimited capital for the deals that you need. Right? So if we get started off on the right foot, it gives us a good segue to getting and building that relationship.
That's beautiful. So how many, I had one person, I think, that did a couple deals with you, and then they reached out to me and they said, do you have any other lender recommendations? Because I did a couple deals with Patrick and I need another loan, but I don't want to bug him again. I feel like, I might like be maxed out. Like, I guess he thought like, there was a number of loans that he could do with you or something like that. And I told him, hey, you need to call Patrick. What he wants to do loans, right? And was that the right thing to say to him?
Yeah, I mean, I'm evaluating risk, right? But there is no cap on short or long term money. And again, on the long term money, it's really less for me to think about because there's such an equity position at that 60% loan to value. But I mean, I have teams on the short term around the country who buy at auction and are buying, distressed properties or not even distressed that just need, under market value. And I maybe have 20 deals in the pipe with one person, right? So at first I may say, hey, let's knock off these first two that we have in the pipeline. Maybe we fund 2 loans, and I'd like to see you get through those before I take on 2 more. But no, there's no limit, or there's no transactional number, and there's no capital number. So it's not like once you have $1 million out, then you hit the cap on the capital level. And there's not like once you have 10 loans out that's an issue, right? Again, we don't sell any debt to Fannie Mae, so we don't have any tie to Fannie Mae or to anybody. We don't have to answer to anybody, right? Mm-hmm. Because all of our capital is coming from people with self-directed IRAs or cash in the bank, and they just want to earn a passive 6, 7, 8, 9, 10% return on it. So you're not going to be with the same lender if you have 10 deals out with me. You're probably going to be with 10 different lenders.
I see. That's awesome. So I'm sure you talk to a lot of people, and I'm guessing a lot of them don't end up pulling the trigger, and you might never hear from somebody again. Why do you think that is? Like, when people fail to pull the trigger on doing a deal, getting a loan, what do you see that's usually kind of holding them back from that?
Well, there could be 2 things that come to mind. Number 1 is fear, right? And fear petrifies us all. Mm-hmm. So you need some mentors like yourself to kind of tell us that taking a risk is okay. But also maybe I'm not the best deal. Maybe they found another deal.
Got it.
Maybe there was another lender that had a slightly lower loan fee or a slightly lower interest rate. That's cool. Or maybe by the time they got back and made their offer, it was in multiple offer situation. I mean, there's a number of different scenarios, but for me, I think that fear is the biggest thing that prevents people from pulling the trigger.
Yeah, absolutely. I think a lot of people are also pretty debt averse. I see that belief that you need to have paid off rental properties is still pretty present in the industry. And I'd like to know your thoughts on that, on like whether or not debt is a good thing or a bad thing. Should you try to have paid off properties? Does it create a lot of risk to get a bunch of loans from somebody like you? I think, could you speak on that a little bit?
The whole point of investing in real estate is to use leverage. I mean, sure, it's great as you build and you go farther along in your career to have free and clear or unencumbered assets. But I mean, debt allows you to use 100,000 and buy 2 or 3 properties as opposed to buying one free and clear. and you get tax benefits by write off your interest and your other things that go along with that debt. I mean, our economy is built on debt, so that is a complete misnomer. And I think that people who really build their portfolio correctly do it with leverage, do it with debt, and they absolutely do not do it with cash.
I agree. I've found it to be much, much faster with debt. And an analogy I like to give people is like, so you don't want any debt. What if I were to give you 50 rental properties that all had a loan on them, but they all cash flowed at $300 a month positive? You telling me you would not accept that free gift from me? Most people are like, well, you mean that'd make $100,000 a year? Yeah, I'd take that, right? And so I'm like, go get it,
Absolutely. And again, there's just a lot of people are scared, they're unknown, and they're getting started, but you have to take a risk in that leap of faith. And I think that starts by surrounding yourself with the right people. So make sure that you do that.
Patrick, this interview has been awesome, and thank you for it. Before we start to wind down here, do you have any final words of wisdom or anything else you'd like to share with the audience?
Totally. Well, first and foremost, Brian, thanks for having me on the call. Hope we can do it again sometime. But to the audience that's out there, feel free to give me a call, right? I'm here to help. I love chatting with folks. I've got a solid team around me. The phone is ringing off the hook, though. So, a call or two, if I don't get back to you within 24 hours, is always appreciated. You can find my information at marshallreddick.com. That's MARSHALL, Reddick, REDDICK.com. There is an ability to actually load a loan application without talking to anyone. But you can certainly browse the short and long-term programs that are available. There's also frequently asked questions. So I encourage you to visit the website. I encourage you to get started in real estate as soon as possible because it is the best wealth builder that's out there. So thanks again, Brian.
Thank you, man. And I will put marshallreddick.com in the show notes. If there's any other links you want me to put in the show notes, just shoot that to me after we're done here. And thanks for your time. I think this is going to be really helpful for people to hear who are sitting on the sidelines. They're a little nervous. You really did a great job kind of obliterating all those objections and those fears. So I'd love to have you back on again. And thanks, man.
Absolutely. Thank you. Have a great day.
You do the same. And thank you guys for listening. I will see you on the next episode. Peace. Want more? Download my free course, Fearless Financing, at fearlessfinancing.com. In this free course, you'll learn exactly how you can get the money to buy your next rental property, even if you have no cash, no credit, and no experience.